Working. So my name is Aydin Kilic. I'm the CEO and co-founder of Fortress Blockchain. I'm going to talk today a little bit about the fundamentals of Bitcoin. I want to give everybody a better understanding of how it truly works. I feel like a lot of people have a notional understanding, but if you were asked on the spot, you might be hard-pressed to provide an accurate answer. Our company, we are an industrial-scale Bitcoin mining company. That's why I'm speaking on the topic. We will be publicly traded in early July on the TSXV under the ticker name FORT, F-O-R-T. In December, this isn't a corporate presentation, but just so you know who I am. In December, we raised $20 million. 15 million of that was institutional money led by Desjardins, which is a Canadian investment bank. Fidelity Investments, which manages $2 trillion worldwide, is my largest shareholder by far. We're an engineering-first, technology-focused company. I have an engineering science background. I studied at SFU and have worked in engineering and property development. Anyways, we've sort of attracted a lot of the more sophisticated institutional investors and will be publicly traded again in early July. But anyways, what is Bitcoin? So maybe this is a simple question, but again, if somebody asked you, could you succinctly describe it? So I want everybody to leave this presentation with a clear understanding of what Bitcoin really is. It's a distributed ledger of transaction histories. That's what it is. When you see like a gold coin with circuits and a B on it, that's just an icon. It's nonsense. That's not what it is. It's a distributed ledger, meaning the record is kept all over the world across nodes. And it's transaction history. So what do we mean by transactions? Well, a transaction is quite simple. I have a digital wallet, you have a digital wallet, I send you some Bitcoin. That's it. So each block on the Bitcoin blockchain has about 2,000 of these transactions, and there's over 500,000 blocks that have been mined to date. So again, it's this distributed, meaning it's all over the world, record of transaction histories. And so that's what Bitcoin is. Why is this important? Why is this significant? Because it allows you to transfer value, and the value is the currency that you're sending. So it acts like a currency, and you can do it without a bank. So you don't need a government to print the money and tell you what the money is worth. You don't need a bank to regulate anything. And so nobody can alter the transaction history. You don't need a bank. And that's sort of why it was so impactful when it first came out. Now people understand in the mainstream, and so here we are to talk about it. Now, our company, as an industrial Bitcoin miner, I'm going to shed some light on that aspect. So mining is this better? Yeah? Okay. Hello? Okay, that's better. Sorry, guys. So, mining. You have this record of transactions, right? It's a great idea. Anyone can access it, but you can't have anybody add to it, otherwise it would create a mess. So that's where the miners come in. It's what we do, it's what other companies in the space do, people worldwide. So miners do a proof of work, which gives them the right to add transactions to the Bitcoin blockchain. What they're doing, I'm going to talk about it really briefly. I could go on for an hour, but I only have 15, 20 minutes. So they're solving what's called a cryptographic hash function. So simply put, a hash function is you can take any text input, apply to the hash function, and the output will be a single number, right? So all these miners worldwide are trying to determine if they get the right output. And the right output has to be less than a target. So it's a very complex guessing game, if you will. And when a miner guesses the right hash, right, all of the nodes worldwide that are on the Bitcoin blockchain can very quickly verify this. And so this process is called hashing, and the speed at which a miner hashes at is usually measured in terahashes per second. So that's 10 to the power of 12. It's a huge number, trillions. So a single miner, a single mining device will do trillions of hashes per second. A mine like ours, an industrial scale mine, may have hundreds or thousands of miners, and they would be measured in petahashes. So this is a very important number. Petahashes is a figure, if you're an enthusiast, an analyst, a banker, anybody that's evaluating companies that are mining Bitcoin, or at least suggesting they're mining Bitcoin, they should be very forthcoming with their petahash, because that is their output, which connects to the Bitcoin that they produce. And, pardon my engineering background, but it's quite elegant. There's a mathematical relationship that specifically defines the reward mechanism of petahash to Bitcoin. And I'm going to walk you through an interactive tool on our website that anybody here can use. It's at fortressblockchain.io. So the takeaways from this slide are petahash per second are how you measure the output of a mining company. Okay. Now, I'm just going to step back for a second and provide some context. We were talking about, Bitcoin and the transaction history. The other thing that's very important to understand is the entire history from the inception of the entire Bitcoin blockchain is readily available for anyone in this room to go look at. This is not my company's website. You could go to blockchain.info and look up the history of any block. So, for example, this is a random... This is a random block. This is not an important one, but on March 12, 2008, that was when the 513,255th block was mined. That particular block had 738 transactions, and over 5,000 Bitcoins were transferred. So why is that significant? Because in 10 minutes, $45 million were transacted globally without a bank or without any jurisdictional oversight. And this has been going on since 2009. So again, this entire ledger, this distributed record, is available for anyone to inspect. So you don't have banks or governments that can, obfuscate or muddy the water, so to speak. So where did it all start? This is, I don't know if anybody recognizes this, but this is a newspaper article from June 2009. It was from the UK, it's the Times, and they were talking about the second bailout of the big banks. So essentially, this newspaper article was saying the financial system as we knew it globally had failed. And so why this is important is the Genesis block, right? Where did it all start was a question I prefaced this with. Well, the Genesis block of Bitcoin actually had the text from this newspaper article in the Genesis block. So the transaction data actually mentions this article. That's very significant for two reasons. One, it puts Bitcoin at a certain point in history, but two, it helps us understand what Bitcoin's mandate was, and it was to solve a broken financial system. So I hope that by providing this level of information and intrinsic understanding, you can walk out of here being a lot more confident in understanding why Bitcoin is so important and how it's actually been around since 2009. So that's where it started. Where are we today? So globally, there's over 10,000, that's better, pardon me. There's over 10,000 nodes worldwide, okay? So what are the nodes? Well, when I said Bitcoin is a distributed ledger, right, it means that the ledger doesn't live in one place. Every one of these nodes has a copy of the ledger, right? And a node is simply a computer that runs the Bitcoin Core client. Any one of you can go home tonight, download and install and run the Bitcoin Core client, and you know what? Then you're a node too. Then you're part of the system, okay? So there are a huge amount in the US, Germany, China, and so this is what makes the Bitcoin blockchain so robust. If you wanted to compromise it, you'd have to hack over 5,000 computers instantaneously, which is effectively impossible. That's why the blockchain is so robust, and this didn't pop up yesterday. It's been around for 9 years. Now, you understand what nodes are. I explained the fundamental concept of a distributed ledger and transaction histories, and you can go explore any block on blockchain.info. And then you can look at the transaction history. Now, it's not going to have your name or my name. It'll be like a digital wallet address, the transaction amount, but it's all data and it's all public information. So now I'm going to start getting into a bit more of the mining component. The nodes verify the miners who do the successful proof of work. So the nodes sort of keep a record of the Bitcoin blockchain, and when a miner has done the successful proof of work, the nodes quickly verify it, and a block gets added to the chain. So on that note, I'm going to explain how mining works, because we mine and there's other companies that mine. The miners do the proof of work. Do you guys want to queue up the website? So this is actually from our website. You could go to fortressblockchain.io, and we built this for the public to use. Now, some of the more advanced people in the audience maybe say, okay, well, Bitcoin calculator, I use Crypto Compare, I use Coin Wars, but the problem with those calculators is they give you a single piece of data at one point in time, but that's not an effective way to measure profitability, and I'll show you why. So a little bit more context. We developed this to keep everybody honest, because there's a lot of companies in the Canadian capital markets that claim to be, oh, we're going to be mining this much and we're going to be doing this and that, but unless they're talking about their petahash output, they've got something to hide. And if they are talking about their petahash output, you can run the calculator and figure out exactly how many Bitcoin they should have been mining. So this is the great equalizer that will keep everybody honest. And so I want to share it with you today. So we can input the figures that are commensurate with our facility. So we happen to have 1,400 miners. So if you want to put that in here, you insert the number of miners. Okay, 1,400. Is that good? Let's say 1,400, yeah? And then the pooling fee is standard at 1%. I can go on about that, but it's a bit too technical for today's talk. Now, regional presets. So this allows you to select the cost of electricity. Most people don't know what their price of electricity is in kilowatt hours, but we provide the national averages for Iceland, United States, Canada. It ranges from 5 to 8 cents in terms of the national averages. Our power is at 2.6 cents a kilowatt hour. So you could select Fortress Blockchain and we'll just replicate our mine. Perfect. And then in terms of hardware, earlier in the presentation I mentioned the hashing speed, right? So if you have a single miner, there's all sorts of hardware models. There's eBang, there's Bitmain, Bitfury, Canaan. So people who aren't familiar with the hardware specs, we've done the homework for you. You can pick any one of the prevailing types of miners. We run Bitmain S9 hardwares. The second one, please. Perfect. And so 13.5 terahash, cost of the miner, and it'll tell you what the total power consumption is, because each miner has a different power profile. So the economics of mining are dictated primarily by the price of the power that you're paying, the speed of the hardware that you're running, and its power consumption. So there's mathematics behind this that define what your revenue and profit would be. Now, this is what is very unique that you won't find anywhere else, is the date range. So we allow you to measure and track the history of the profit for the past 2.5 years. Why 2.5 years? Because that's the current life cycle of 16 nanometer technology that we're coming towards the end of, but that's sort of the current era of ASIC mining hardware that we're in. So if you leave it blank, it'll give you the full 2.5 years. Go ahead and click start. Now this is a legal disclaimer, our lawyers told us to put up. Click the disclaimer. And so what you have here is a graph that shows the difficulty and price over the past 2 years. So you can mouse over it and it's interactive. So why this is important is you could see how much the price has changed and also how much the difficulty has changed. A lot of you in the audience might have heard, well, difficulty is going up, price has come down, and people have a general idea of what this means for profitability, but we provide you the exact understanding. So you could see exactly the price today is about 7,500. The difficulty is a little over 4 trillion. By the way, the difficulty is mathematically defined as the number of hashes to solve one block is the difficulty, which is an integer number multiplied by 2 to the power of 32. Okay, that's my engineer. I'll just keep it simple. Go down for the profit. So this is it. So this is the profit graph, okay? So you could see how much it changes over time. So if you look historically throughout 2017, yeah, just mouse over where the green icon is, you could see it was roughly about $10,000 to $11,000 per day. And that subsisted for quite a long time. At least, again, this is a facility of our size without our power costs. You can go back, change the power costs, see how that affects things. And there was a huge rally in December when the market went nuts. And now you could see this is where the profit's at. So the profits, I'm just leaning to get the pointer. It's about 7-8 grand a day right now, as we're in a bit of a corrective market. The point is that now you can say with confidence where the profit actually is, and you don't have to speak in general terms. And you know, you can also click on Show Details, and we provide the tabular data. Scroll down. Scroll down, please. Oh, all right. Click on Submit. Boom. Scroll down. Just mouse down. Yep, mouse down, click Show Details, and boom. Oh, okay, I don't know, this web browser is funny. Anyways, all the tabular data is there for you to study, and that's for anybody to use fortressblockchain.io. Oh, there it is. There's all the tabular data. So within a very high, like about 98% accuracy, you could know what your block reward and transaction fees would be. So I'm going to flip to the next slide now. Okay, good. So a little bit about Fortress. So again, the mine that we run in Washington has been operational since 2014. It's evolved through three hardware cycles with Bitmain. So it's been optimized over time. The power, again, is 2.6 cents a kilowatt hour, which is the cheapest in North America. We've yet to see any of our competitors come forth with figures confirming that they have anywhere close to that cheap power that cheap. And the important thing, again, is that this is your primary determinant of profitability. So having the cheapest power makes us pound for pound the most profitable miner. In addition, there's a lot of proprietary design in our facility that has come from being operational since 2014. There's a technical term called power usage effectiveness ratio. Again, if you're an enthusiast or a potential investor, you should look into this sort of stuff, and if there's another company, you know, they should be forthcoming with how many miners per megawatt they're running, because the more miners per megawatt, the more profitable that you are. Our management team, we have entrepreneurs, capital market experts, people with backgrounds in engineering and blockchain, and so this is sort of a summary of who we are. This is our team, myself. Our management team is based in Vancouver. My CFO, David Pace, has been CFO of 4 companies, all of which have gone through M&A transactions. He was a senior VP of finance in Ernst & Young, and Michael Ages, a senior systems engineer on the Mercedes hydrogen car, which is an elite engineering project headquartered in Vancouver. Alice Wong is from Deloitte. My board of directors, so we have representation from Silicon Valley as well as East Coast. So Roy Sabag and Josh Crum are young guys that co-founded a company called Gold Money. They together have $2 billion in 24 karat gold, which they use to back a payment and savings platform. Their company Gold Money is a $500 million market cap on the TSX. And so they're pivoting into cryptocurrency now. So it's a great marriage of ideas, extremely bright guys. Kent Wakeford, he's based in Silicon Valley. He sold his company, a gaming company called Kabam, for $750 million to KSV Esports in Korea. And David Jacks is the founding CFO of PayPal. He's also on my board of directors. He's based in Silicon Valley and was a former senior VP of Silicon Valley Bank. So we've got a world-class management team with a phenomenal board of directors. Gao Yang Gong was a former director of mining for Bitmain. He's designed and operated the world's largest mines, 175 megawatts. Paul Lum, who's here today, is our original architect. And I know we're running short on time, so I'll wrap it up. So if you're curious what an industrial scale Bitcoin mine looks like, This is what it is. We've got a proprietary cooling system. We're running about 18.9 petahash. Again, how many petahash? 1,400 miners. It's doing about a Bitcoin a day right now. And to sum up, I was in Toronto a few weeks ago. CIBC invited me for their technology conference. And I've met with Royal Bank, TD, Scotia. So I'm dealing with the big four banks. I'm trying to educate them on the importance of this emerging industry. And a lot of the feedback I got was they really like the credibility that our company brings to the table, the transparency with the mining calculator and keeping everybody accountable, our operations, again, having a 4-year history, the management team, and the closing point here is if you look at a company that's publicly traded, measure or ask about their enterprise value per petahash. This is the most important thing I want you guys to walk away from on the business side of things. So a company's valuation should be measured relative to how many petahash it's generating. And right now, our last raise that we did, we're 1/5 of the industry average. So we'll be entering the market sort of from an undervalued position. And conversely, if you look at a company and their enterprise value per petahash is overvalued, you might want to consider that as well. So with that, I would wrap it up. And our booth is over there. My CTO is here, the whole team, my CFO, my corporate manager. So thank you.